But you could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property.
Michael Saylor's perspective on purchasing Bitcoin is akin to acquiring a valuable block of land in 19th century New York. In this historical context, illustrious and affluent families such as the Rockefellers and Trumps were able to not only preserve but also expand their wealth through New York real estate investments. The underlying factors for this success lay in the unique attributes of New York land, its scarcity, high desirability, and the inherent impossibility of increasing its supply, all the while experiencing a constant surge in demand. Saylor's analogy draws a compelling parallel between this historical example and the digital currency realm. In his latest interview, he delves into the reasons why Bitcoin embodies these same characteristics, making it a promising asset. To gain a profound insight into this concept and to get a glimpse of the future of Bitcoin, stay engaged until the video's conclusion, where Saylor elucidates his vision for BTC. As we contemplate the fascinating analogy provided by Saylor, it's clear that the concept of Bitcoin as a digital asset mirrors the enduring value of prime New York real estate. This analogy underscores the critical attributes that underpin Bitcoin's attractiveness: its limited supply, widespread desirability, and the continual upward trajectory of demand. The wealth preservation aspect of Bitcoin is akin to the historic wealth accumulation of the Rockefellers and Trumps through New York real estate. This thought-provoking comparison reshapes our understanding of Bitcoin's potential, and Saylor's insights pave the way for an exciting vision of what lies ahead for this digital asset. In a rapidly evolving digital landscape, it is paramount to grasp the transformative nature of Bitcoin and its enduring value. Saylor's apt analogy provides a remarkable perspective on the essence of Bitcoin as a store of value and investment, and it underscores the need for us to remain informed and engaged in the ever-shifting crypto environment. As we move forward, the future of Bitcoin holds both promise and excitement, and it is through discussions and insights like these that we chart our course in this dynamic digital realm.
Bitcoin represents a new technology. A breakthrough technology, and there's a couple of benefits to it. The first benefit is it's the first digital monetary network in the history of the world. So it's capped at 21 million Bitcoin. So that means if you owned all the money in the world, you bought all the Bitcoin, you had 21 million Bitcoin. 100 years from now, you still have 21 million Bitcoin, right? There's no more Bitcoin coming.
Yeah.
Now, that's kind of hyperbolic because obviously no one's going to have all the money in the world. But a better example is if you buy 1% of the Bitcoin in 100 years, you'll still have 1% of the Bitcoin.
Yeah.
If you buy 1% of the gold in 100 years, you'll have 1/10 of that. You'll have, 0.12% of the gold. And if you buy 1% of the dollars in the world, you'll have, 0.1% of what you had 100 years from now. So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money, right? If money was food and it was spoiling over the course of days, you want a refrigerator, you put the food in the refrigerator, it doesn't spoil, right? So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. So it's kind of a bank, a money transfer network, and it's the money. So it's all three of those things. So this is not as important to Americans that have a bank they trust. But if you live in Africa, and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes, the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half.
Wow.
And it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin, and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country, because Bitcoin is a global network. So everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property, which is not being debased by capital. It's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation, right? And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth $20 million and I've got $10 million in equity. So then I refinance the property and I take out $5 million in equity and I live off of that without paying tax on it. And the next 10 years, the $20 million property is worth $40 million. And then after 10 more years, the $40 million is worth $80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there.
Yeah.
And so the risk is if you bought those 10 blocks in the middle of, Kansas, maybe it doesn't appreciate at the same rate. Generally, this strategy works well when you're buying land in the middle of Tokyo, London, Paris, or New York, right? We all know stories of wealthy people that bought that land, so at the end of the day, it solves a problem every human faces. It solves a problem every company faces. It also holds out some new ideas like most of the modern financial system is all about monetizing assets where people are forced to invest in stocks they don't want to invest in because the alternative is to have their money taken from them by inflation. So why does an 80-year-old retiree have to juggle stocks in order to avoid losing their life savings? Right. And so hence you have the creation of ETFs and you have the creation of the S&P index and you have the overvaluation of stocks. If a company ought to be worth 10 times cash flow, it's worth 20 times cash flow because there's a monetary premium assigned to it. You see a monetization of real estate in places like Canada or even the US where the house costs twice as much as it ought to cost because it's valued as an asset to store your wealth rather than as a property to live in. So in the absence of a decent financial asset to store your wealth, people will use Ferraris and Rolexes and Airbnb second apartments, and they'll buy random things they don't need, or they'll buy companies they don't need, and you'll end up with like the meme stock craze and all sorts of financial speculations. But ultimately, these are people that that are faced with the choice of, I'm either going to lose everything because of inflation, or I'm going to buy something that I don't need now, but I'll speculate that in the future someone else will buy it from me.
Yeah.
And hyperinflation, when the currency collapses, you'll buy crates of soap, you'll buy crates of toilet paper, right? You'll buy bins of charcoal, or you'll buy anything, lumber, because it's better to have the lumber than to have a bunch of paper worth nothing in 2 years. And so that of course results in a distortion of the financial markets, and it also results in a seizure of the actual manufacturing markets, right? Goods and services get out of kilter, and you end up with shortages and scarcity, and the economy just doesn't work, and eventually you're kind of ripped back to some kind of barter, right? Where the economic engine is just cut in half. And we see that, in different places today. And of course, once the currency collapses, right, that's kind of the end of the society, right? That happened in Rome. When the currency collapses, then everybody kind of moves back on their own farm and they produce everything they eat, which is kind of a nice idea, except for the fact that if everybody has to produce everything they own and eat, the carrying capacity of the society is cut by a factor of 20, right? You need specialization. And so that's the challenge we face. And Bitcoin is the first digital monetary network, and it offers people the ability to do something rational.
Michael Saylor provides a profound perspective on why he firmly believes that Bitcoin shares common ground with the scarcity and value proposition of premium New York real estate from the 1800s. Drawing parallels to influential families like the Rockefellers and Trumps who foresaw the immense potential in New York City land, Saylor asserts that Bitcoin is poised to follow a similar trajectory. His comparison underscores the idea that Bitcoin is a unique and finite asset, akin to the prime real estate that has historically been a cornerstone of wealth preservation and growth. Saylor's insights shed light on the enduring allure of Bitcoin as a store of value. Just as the Rockefeller and Trump families recognized the long-term value of New York land, Bitcoin, with its inherent scarcity and growing global demand, presents a compelling case for those seeking to preserve and expand their wealth. This thought-provoking analogy reshapes our perception of Bitcoin's value proposition, emphasizing its potential as a timeless and appreciating digital asset. In the ever-evolving digital landscape, grasping the parallels between Bitcoin and historical wealth preservation is essential. Saylor's astute comparison reminds us of the transformative potential of Bitcoin and highlights the need for us to stay informed and engaged in the dynamic world of cryptocurrencies. As we move forward, Bitcoin's bright future as a unique and finite asset promises exciting opportunities and continues to redefine the financial landscape. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.